Today we're going to talk about tax planning and wealth creation. And so I am not a CPA. Do not take my advice. If you want to speak to a CPA, we have two here at Lotus Financial. Nicole, my wife, she's incredible, licensed CPA, and same with Jenna. And then they have some bookkeepers that work underneath them. I'm going to get through this and tell you, kind of what I know, and I can give you a shorter explanation for all of this stuff. If you run into issues and you're on portfolio, just contact Nicole, contact Jenna. You should already know them by now, or you can contact your coach directly, and they'll be able to walk you through a lot of this stuff. And so how do they calculate your tax liability, right? We want to ultimately pay as little as possible in tax, but stay compliant, right? We don't really try to jump into a lot of gray area, and there's definitely black and there's definitely white, but we don't want to pay it if we don't have to, because we want to make sure that we can reinvest that money back into our business. And so how do they figure it, right? And so income assessment, what are we taking in, right? What are you taking in, and what are your deductions? What are we taking out, such as depreciation, expenses, rent, anything, right? Anything that is coming out, right? It's cash in, cash out, what's left at the end. Tax rate determination. So this is based on like your corporate structure, sole prop, S corp, C corp, LLC, and so on. And then it's also based on how much you're making. Estimated payments. I think these are awful. It's like one of the worst things in business. It's almost worse than insurance. Is estimated payments, because now at this point you're giving the government a tax-free loan. And so before you start making these, you should 100% make sure that you understand where you are financially as a whole, and you want to do this with your accountant. Your two best friends in business, well, your three best are going to be your accountant, your attorney, and your business coach. Estimated payments, do not pay them unless you speak to an accountant first and they tell you need to do that, because again, this is a tax-free loan to the government. Best practices for tax planning, accurate records. We can tell you that when we are looking to partner with a business or purchase a company, one of the first things that we do is we analyze financials before we analyze personality. And those are really kind of our main things that we analyze, right? Financials, personality, and then ability to grow market share. And then that'll help us determine if we're going to purchase a business or not. Pretty basic criteria. And so you want to keep accurate records. Somebody that comes to us with a shoebox full of stuff, it's not always as easy to get them on track. But fortunately, if you're on portfolio and you have a shoebox, it is most likely organized by now. Jenna and Nicole put all of that online. We utilize QuickBooks, and so that way all of your reports and everything are all right there. But accurate records are huge, right? And this is going to help us maximize our spendable dollar by maximizing deductions that we can take. Hire a tax professional. We just talked about this one. Nicole and Jenna are incredible. If you have an accountant that you work with, stay with them. That's great. But here we use Lotus Financial, and that's Nicole and Jenna and all of their bookkeepers. They're incredible. They're so well versed with small business, and they both are at a Fortune 500 company. So they're pretty proficient in tax, both corporate and small business. Year-end tax planning. So this is huge. You shouldn't know in April what you're supposed to pay. You should have a better idea the prior, say October, November. And we're going to get into some other ways, but ultimately, if we need equipment, we could Section 179 that, meaning that we can purchase it if it's qualifying for 179, then we could write it all off the whole first year. And so we're never a proponent of spending $100 to save 30, but if we could save 100 and we know that we've got a monster tax bill coming and we can take that 100 right off of the tax liability, then we'll do that there. But you should have a plan. If your accountant does not have a plan for you by like June, July, August, based on your prior year trends, then you have a problem. Like in our companies, well in advance where you're going to have a problem, where you should spend money, why you should spend it, how we got there, how we're going to manage it. Like this should never, ever, ever be a secret. Roth IRAs, right? This allows us to put money in after tax, and then it grows tax-free. If you're on portfolio, you'll talk to Jeff. I am not the one to explain to you about investments. I'm just going to kind of give you a rundown based on what I know. I know enough to be dangerous, but I definitely don't know enough like they do. And so Jeff and his team are incredible. They'll work with you to lay all of this stuff out. And so the way that they do that, all of these are kind of general ways to save. they're going to know you, they're going to know your income, they're going to know your history, they're going to know what you have already saved and the best way to benefit you. And they're going to do that by working with Nicole and Jenna hand in hand, and then they create a tax strategy that is really going to work the best for you, for your company, and ultimately, if you're on portfolio, for us too. Custodial Roth IRA, similar thing. This is for children. Paying children, this is a big one that a lot of people don't fully utilize. You can have your child do admin work for you. You can have them do some type of advertising for you. You can have them do, all kinds of different things. And at the writing of this document, the cap was $13,850. I heard recently that it went up, but again, I would have to ask Jenna and Nicole about that. I can't advise that. 529 savings account. This is for your children. You can put money in there. It grows tax-free, and so you put the money in there. And then it grows, and they can take it out for education. Our kids go to private school. There's nothing wrong with public school. We just feel that they get a better education in private school, and so ultimately we put money in here. It gives us a little bit of a tax deduction. The money grows in there tax-free, and then at the end of the day, we use that money in that 529. Even though it's a college savings account, we use that to pay for their private school, both middle school and grammar school still. And hire a financial advisor. If you're on portfolio, you get Jeff and his team. They're absolutely incredible. That's where we keep all of our liquid assets. Jeff and his people are absolutely incredible. If you're on portfolio, you've already met them. If you're not, get yourself a really, really good financial advisor. And the other thing that is really important, and we struggled with this for many, many years, was that when we would hire a financial advisor, the advice that an accountant would give us was different than what they would give us. And then, through the years, we've gone through a couple accountants until, we landed on, Nicole making sure, getting her CPA license and everything. Because she wasn't always a CPA, obviously, but we want to make sure that they all agree. And so in our world here at Lotus PE, if you're on portfolio, Nicole and Jeff work hand in hand to make sure that we're getting to our goals as quickly and easily as possible without wasting a lot of money and without giving the government tax-free loans, because they're not giving you a tax-free loan. Understanding Section 179, and so this basically allows us to buy equipment, things that the business is going to use and use regularly, vehicles, equipment, anything that's a qualifying purchase that's going to help make our business better. We can write it all off in the same tax year. And you got to figure out what is actually qualifying, and there are certain guidelines that you can meet. I think a vehicle can be like over 6,000 pounds, and you can write it all off the first year. However that's going to work for you, talk to your accountant or talk to Nicole and Jenna. They'll be able to walk you through that. Annual deduction limit, there are limits based on how much you can take for 179. You can't go spend $10 million and take it all right off. I know that those limits do change, but again, talk to Nicole and Jenna about that. Purchase it and put it to use. You have to use it. You can't go and buy some fancy car and then just leave it in the garage and not put any stickers on it saying it's business. You can't just go buy a boat and just kind of leave that there and hope that you can write it off. If you buy a boat, then you have to go out and you have to entertain clients. There has to be like a justifiable reason. But, in theory, it's my understanding that you can go buy a boat if that was your, if that's your way of entertaining clients. But then you would ultimately keep records. We'll get into that in a minute of how you're doing that, how it's being used, how much is personal, how much is business. It's not as easy as just buying it and then just paying for it with a business account. You can really run into some problems there. Benefits of early purchases, and so if you anticipate needing a piece of equipment, and so if I'm like, oh man, we want to get 2 more vans. I know that we're expanding, and at this rate, we're going to have to hire about 3 more, electricians. We're going to need at least 2 licensed and 1 to 2 more unlicensed, and they're each going to need vans or vehicles that they can drive. And I know that we're going to need it by springtime, but right now it's say October, hypothetically. Well, guess what? If I could take the tax advantage and do it now, and I have the money to do it, then I could do it now, and instead of later, because now I can write it off for this tax year, and I'm going to be in a better position to do that. And depending on the size of them, I might be able to write them all off at the same time. Write the whole entire purchase price right off, even for both, depending on how much of a tax hole I was in. If not, then you'll be able to depreciate those over time and take a little bit of it every year to offset some of your tax liability. And then, one more thing too. If you are going to go buy vehicles, you could still take loans. You don't have to write the cash. So if you're going to buy $200,000 Sprinter vans or something like that, you don't have to write a check for $200,000. I definitely don't advocate for that. I think that you should always be taking loans. When I first started out in business, I always thought somebody or even myself was successful because I was able to go and buy a car all in cash. As knowing a little bit more about business, I think that I would be a failure if I did that and I went and spent $200,000 on vehicles that were going to depreciate and get abused and not appreciate. So again, talk to your accountant, talk to your coach. They'll be able to give you a lot more information about that. And keep detailed records. You have to be detailed as to like how much you paid for it, what you're paying in maintenance, what you are using it for, when you're using it, how you're using it, where you're using it, all of that, all of that good stuff. And consult with a tax professional. So before I make any big purchases, before I make really any purchases, I always consult with Nicole about it. I am ultra mega cheap, so this isn't really a problem. Like, I still shop at Old Navy for most of my stuff because I don't know, it fits me well, and then I don't know, I just don't care enough. And so, we don't have a major problem with going off and just spending money on stuff because I never want to spend it unless, we see value. And so if something is $1 million and I know that it's going to make us money and it's going to appreciate in value, then I will write whatever check I have to get that right now. If it's $1 and it's at a cash register in a grocery store and I know that my kid is just going to leave it on the floor of my car, I'm going to have to pick it up later, then I'm not going to buy it. If it's $1, I don't care. So make sure that you consult with your tax professional. Make sure that Jenna and Nicole obviously are the best, and they'll work with Jeff to make sure that like all of this stuff that we're doing and we're talking about here is all put to use in the right way. Because much like all of the information that you're going to learn in this program, any given part of this that's not followed properly with the proper people in place, it's absolutely useless. And your job as a business owner is not necessarily to carry all of this stuff out. It's to figure out what your goal is, figure out what you need to get there, and figure out who the hell can do it for you, right? Get the right people on your team because you're not going to grow without them. And if you need anything, please reach right out to your coach directly. You can find us on our website, or you can, if you're not on Portfolio, you can reach out to us through our website. On page, you can ask questions, or you can grab Nicole and Jenna's information right here. It's all hyperlinked, and you can email them directly. Thank you so much. I'll see you in the next module.